Cleanaway is Australia's largest waste management company. We are about 85th ranked in ASX 100. Market cap about $3 billion. And we are a market leader in every single sector of waste we deal with, whether it's solids, municipal, commercial, C&I, or liquid hazardous, non-hazardous, or hydrocarbons. The company has been trading for a while, and as you know, and for the last 3 years, we have shown year-on-year half growth, which I'll go through in a minute. Just on a half-year results, which we declared about a month ago, as you would see, every single metrics on a P&L and balance sheet was up. Revenue is up, EBITDA up, quality of margin, EBITDA margin is sitting at 22%, EBIT at 11%, and PAT at up by 25.8%, and earnings per share up as well. On statutory results, as you would notice, our stat results were actually better at an NPAT level on the underlying results. If you compare the results last 3 years, we have been going through a bit of transformation, been fixing the business after long tough times, but here we are on 3 halves. Every single metric is up, and we would now class ourselves as onto our good to great journey. If you compare our quality of earnings with the world's best companies in waste, we are not there as yet, but if you show the improvement, we have improved faster than a lot of our peers around the world from that perspective. A couple of things on that. On 11th of December, we announced the acquisition of another listed waste management company called Tox. The acquisition is their board recommended. We have a support of their board. We raised the equity soon after, and that's all been done. We are now in the middle of ACCC approval. We expected the ACCC approval to come by end April. Everything going fine. We should have a transaction completed by end of this financial year. So that's what we're expecting. Tox is about market cap of about $700 million, turnover about $500 million, and has a very, very good priced asset. So in a waste management company, the way the value chain works is you have a collection business, which is the front end business, which is a logistics arm. Then what you have a whole bunch of priced assets at the back of it, because you kind of create value, but not just collecting, but then processing that waste either through recycling, resource recovery, or taking it to waste to energy or landfills. It is those infrastructure assets which have a life of 30 to 40 to 50 years, which is the inherent value in those businesses. See, the front end of the business is fragmented and barriers to entry are low. It's the tail end of the piece, which are what we call priced assets. They're restricted. They need EPA permit and kind of have a life of anything, as I said, from 30 to 40 years. Combining with Tox, we will have a footprint of about 200 locations all over the country, and we would have about 90 what we call prized assets. Some of those prized assets, you would not get them even if you had an unlimited amount of money, simply because of the restrictions and the permits granted about 10 years ago. So I think that's the key on that acquisition. We committed to the market. We have a 2-year integration plan. So if our earnings is, I think the market consensus right now is around 323 million EBITDA for FY18. Tox's earnings is about 85. And then we have also confirmed $35 million synergies out of those 2 businesses. So if you kind of fast forward that, you can probably come to what the FY20, FY21 for the organization can look like. And we have committed to the market that our focus over our post-Tox acquisition is getting the synergies out, making sure while the business is performing. On an outlook statement, we have confirmed to the market. We don't give guidance, but we have confirmed our comfort level, if I can say, to the existing market consensus. I do want to point out, though, that if we deliver this year's consensus in 3 years' time, from FY15 to FY18, we have added $100 million in EBITDA in organic growth in the business. And I think that's an important point to make for an organization like us, because we did an inorganic growth agenda by acquiring Tox, which has an EBITDA of $85 million earnings. The point we're trying to make here is that we have actually grown organically last 3 years, $100 million EBITDA, before we went and put a hand in a pocket or asked shareholders to support the inorganic growth. So we have a history of delivering on inorganic growth as well. Last year, we also announced $1 billion worth of new contracts, which we won, which gives us earnings of about $100 million a year for next 10 years. So you combine that on top of that into FY18, FY19 earnings, it probably gives you a pretty good sense of where the organization is headed. On the issue of China recycling, I know there'll be questions, pretty topical issues. We announced at the half-year time that our exposure is minimal. There is definitely an exposure, but we did say that considering all that exposure, we still feel comfortable with the full-year outlook.